Well, intrinsic value is the number that if you were all-knowing about the future and could predict all the cash that a business would give you between now and Judgment Day, discounted at the proper discount rate, that number is what the intrinsic value of a business is. In other words, the only reason for making an investment and laying out money now is to get more money later on, right? That's what investing is all about.
G'day guys, welcome back to the Devon Too Good Investing channel. Now, as Buffett said, when calculating intrinsic value of any business, what you need to do is calculate the cash flows that business is going to generate from now into Judgment Day, and then discount that back at an appropriate discount rate. So to assist you guys with doing this, I've put together what's called a discounted cash flow calculator. So all you need to do to calculate the intrinsic value of a business is fill in these boxes that we got here. And this calculator is going to be provided free. I'll put the link in the description for this one. But this is pretty much a thank you to you guys, as I've just reached 100 subscribers. And yeah, I just want to put this out there for free. Just to say thank you and help you guys improve your investing. So yeah, for all of you to subscribe to my channel, thank you very much. You know, we're going to be pumping out heaps more content. This is just the beginning, and yeah, thank you for joining me in this journey. So guys, I'm going to show you guys how to use this, because there's some pretty cool stuff in here. So we're going to do a example on the company PayPal. I'm sure you have all heard of PayPal before. So the first thing you need to do when using this calculator is put in the company ticker symbol. So the company ticker symbol for PayPal is PYPL. And once you put that in, it's going to automatically update what its current market cap is, what's its current share price, and as well as its current PE ratio. Now, these numbers have been pulled directly from Google Finance, and you can put in any stock here and it'll automatically come up. For example, if we put in Facebook, it'll come up and change the values depending on what company you enter. So once you've entered the ticker symbol of the company you want to analyze, you're then gonna have to enter a target rate of return. So this is pretty much your discount rate. As Buffett said, all future cash flows need to be discounted at an appropriate rate. For me, this is my target rate of return, which is 22%. So that includes the margin of safety. So my actual target return is 15%. But if I want to incorporate a 50% margin of safety, 22% is the number I want to enter. What we need to enter next is our terminal multiple. Now, the terminal multiple is the multiple you believe the business will be trading at the end of the period when you sell. So for this model goes out 5 years in the future, as you can see. So you're going to have to put in what you believe the terminal multiple will be out in 5 years. So let's say it's a fast-growing company. The terminal multiple will be higher. If it's a slow-growing company, the terminal multiple will be lower. But you need to determine what you believe this terminal multiple will be. So one of the ways of doing this is you can look at the historical PE ratio and sort of take the average, or maybe you could look at the historical price to free cash flow ratio. You could take sort of the average of that, or you can look at other businesses in the industry and just take the industry average. For the sake of this video, I think a fair terminal multiple in 5 years for PayPal is probably anywhere between 20 and probably 25, but I'm just going to put 25 in for this video here. Now, the next step is we need to enter the shares outstanding for the company. So to do that, I'm going to head over to Ticker Terminal. You can use pretty much any service, or you could just go onto the SEC filings for the company. But I'm going to go into the income statement, and I'm going to scroll down towards the bottom where there's supplementary data here, and it tells us the weighted average diluted shares outstanding. So you want to be careful here. There's the basic shares outstanding and there's the diluted. For the sake of this calculator, you want to use the diluted. and we're going to enter in this value here into our calculator. So it was 1187.5. So next is we want to calculate the net cash. So this can be done by hopping back over to ticker. We're going to go to the balance sheet. Now, to get our net cash, we need to get it's the total cash and short-term investments. So that's 13.2 billion. And we're going to minus that by the long-term debt of 7.9 billion. Now, the nice thing about ticker is if we come down to the supplementary data, it tells us our net debt here. So because it's net debt, it's negative, but for our calculator, we're actually using net cash, which is going to be positive in this case. So we're going to put this number here into our calculator. So it was 3594. Now the next step is to grab our operating cash flow. So to do that, we're going to jump back over to ticker terminal. We're going to go to the cash flow statement. We're going to go down to the line that says cash from operations. And we're going to grab the last 12 months cash from operations number, which is 5.9 billion. So we're going to enter that in millions in our calculator. So it's going to be 5924. And then the next step is to get our capital expenditure. So we're going to go back over to ticker terminal and we're going to go down to the capital expenditure line. And we're going to go across and it's 921 million. So what we need to do next is grab that $921 million capital expenditure figure. And we're going to go put that into our calculator. And as you can see, I've already entered it in. And then the next step is to grab our maintenance capital expenditure percentage. So what this maintenance capital expenditure percentage is the percentage of the total capex that is going to be used for maintenance of the business assets. So typically, if you're not too sure, you probably want to enter something like 50%. Sometimes the company will tell you in their reporting, but most of the time they won't. So it pretty much, the number that you enter here depends on the, pretty much your knowledge and confidence on the business. For PayPal, I think 50% is reasonable. So we're going to enter 50%. And then the next step is to select some growth rates. So I think PayPal can probably grow anywhere between sort of 12 to 20%. So we can enter those growth rates in these boxes like that. And you can see that now that we've entered our growth rates, our cash flow generation over the 5 years has been calculated. And now we can see what price we want to buy the company at. So you can see we got 5 models and our buy price is anywhere between 97 billion and 132 billion. So if we go up and see the current market cap is trading at $220 billion and our buy price per share would be anywhere between $82 and $111. So in order to hit this, in order to hit our sort of most aggressive model, PayPal would need to fall another 40%. And then to hit our most conservative model, PayPal would need to fall another 56%. So as you can see, even though PayPal stock has fallen a bit recently, if you want to achieve a 22% return, the stock price is quite frankly still too high for that to, be realistic. But let's say you're not interested in a 22% return and you're happy with a, let's say, 10% return. We're going to scroll back down and you can see that it updates it for a 10% return. And you can see currently, if you're confident in Model 5, it's a buy right now for a 10% return at $194 per share. But if you're not too confident in Model 4, in Model 5, it is getting close to Model 4. But then if you're like waiting to get down to these lower models, the stock price is going to have to drop further. So guys, as mentioned before, you can use this calculator to value pretty much any company as long as you can fill out these details here. So for my calculator in particular, you only need to fill the grayed out boxes and everything else will be calculated for you. And then you want to buy stocks. We've got a bit of a traffic light system going, so pretty much red means you want to wait. Yellow means it's getting really close, and you should probably start doing some like real deep digging and research. And then green means it's under the price that you want to buy it at, so it could mean it's a good opportunity to buy. But yeah, this calculator will be left in the subscription, not the subscription, the description down below, so you guys can access it. I've opened up access for you guys. Once you click the link, pretty much what you want to do is you want to go press file and you want to make your own copy. So then you have your own, you can save it on your own sort of Google Drive. But yeah, this is pretty much to say thank you for 100 subscribers, and I really appreciate it. If you're new to my channel, make sure you like this video, make sure you subscribe, and I'll be coming at you with more valuable content. Thanks guys, see ya.